Hey everyone, it is Julie here with TipRanks. Today we're taking a look at 3 strong buy stocks in the AdTech industry. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at companies in the ad tech space. Specifically, there is one BMO analyst, Pitz, who thinks that 2024 will be a breakout year for ad tech companies. They expect the global digital advertising market to grow to about $668 million this coming year. And as such, they've selected 3 ad tech stocks that they think are primed for some great growth. So we're going to take a look at these companies, what it is that they do, and of course how analysts are weighing in on the stock's future. You can follow along over on TipRanks.com or by downloading the TipRanks mobile app by using the links in the description down below. Let's get right into our 3 strong buy ad tech companies. First up, we're taking a closer look at the Trade Desk. They trade under the ticker TTD, currently priced just above $68 per share. Their stock has seen growth of about 45% in the past year, but has been cooling off in the last 6 months, down about 17%. The Trade Desk is a software and technology company offering marketers, advertisers, and branding experts the tools they need to get the biggest bang out of their ad tech bucks. They put all of their ad tech tools into a single platform, making the product home for its users. The company's tools allow digital advertisers to optimize their ad spending and targeting, putting their databases to work, and also increasing the reach of their marketing efforts. They describe their mission as making digital advertising better. In their last quarterly earnings report, they did come out with both an earnings and revenue beat. However, their Q4 future guidance did disappoint investors, which has been causing the stock to trade a bit lower. They'll be sharing their 4th quarter on February 14th, where analysts will be anticipating earnings per share of 41 cents. This follows their Q3, where they reported earnings of 33 cents per share, coming in ahead of estimates, and revenue grew 25% year over year to $493 million. They noted that as they enter their busiest time of the year and look ahead to 2024, they've never been in a better position to capture greater share of the $1 trillion advertising total addressable market. And it seems our BMO analyst agrees. With their recent buy rating, they note that they see a significant greenfield opportunity for the Trade Desk. The analyst notes that Trade Desk has its fingers in a rapidly growing pot and that the company is skilled at making the best of that, saying that they're staring down a massive, growing total addressable market that is also mix shifting towards ads bought and sold digitally. The global online ad market is forecasted to exceed $1 trillion by 2027. Their buy rating on the stock comes with a price target of $88 per share, which would be an upside potential of over 28% from current prices. Now, overall, the Trade Desk stock does come in as a strong buy with 20 analyst ratings, breaking down to 19 buys in just 1 hold. The average price target for the stock comes in just above $82 per share, which would be an upside potential of over 20%. Down below, you can see all of our most recent ratings here from the last couple of months. On the low end, we do have a buy rating with a slight upside of 2% and a high-end price target with an upside of over 45%. Next up is a company called DoubleVerify Holdings. They trade under the ticker DV, currently priced at $35.60 per share. Overall, the past year, they're up 50%, but if we look here, they did take a big dip down, have been climbing back ever since, up 25% in the last 3 months. DoubleVerify is a firm that specializes in data management and analytic tools optimized for digital advertisers. The company's software platform lets users optimize their digital ad spends, support multiple brand messaging, and bring a solid return on investment. The company describes its own business as trust, building trust with its customers so they can build trust with theirs. Because when the digital world is trustworthy, providers and consumers alike will gain. Now, their stock did take that hit about 6 months ago after they announced they'd be acquiring a company called Pitz, but it has been recovering since. Back in November, though, they did come out with mixed results where they fell a bit short on earnings but did saw revenue grow. For their 3rd quarter, they reported earnings per share of 8 cents, which did fall short of expectations. Revenue did grow 28% year over year to $144 million, and they did complete their acquisition of Pitz, which is the global leader in AI-powered digital campaign optimization. Our BMO analyst Pitz recently weighed in on the stock, noting that their strong presence in fraud detection would be a boost. He notes that digital ad fraud is set to double to $172 billion by 2028, and this fraud and waste comes in many forms, including bots, click fraud, made for advertising websites, and disinformation. DV seems best positioned with its platform, given our expectations that AI will only intensify these challenges for advertisers. He gives the DoubleVerify stock a buy rating with a price target of $44, which would be an upside of over 23%, and he is one of 16 analysts weighing in on the stock. It does come in as a strong buy with 15 buys and 1 hold. With an average price target of $40 per share, that would be an upside potential of 12.7% for this coming year. Down below, we can see Brian's rating here at the top. There's several others around that 23% mark. We do have a hold rating back in November with a downside of 10%, and our high-end price target is at 26%. And third on our list today is Integral Ad Science. They trade under the ticker IAS, currently priced just above $14 per share. Overall, in the past year, they did see growth of 49%, though they also took a hit about 6 months ago, dropping over 20%, slowly climbing back here ever since. Integral Ad Science is a New York-based ad tech firm. They focus on the combination of data analysis with digital marketing, ensuring that ads in media are effectively and efficiently targeted for the maximum ROI. The company aims to create actionable, fraud-free data solutions to deliver superior results for their customers. They shared their most recent earnings report near the start of November, and results were mixed. Earnings per share did fall short of expectations. However, we did see revenue increase, and on top of that, the company increased their full-year outlook. For their third quarter, they did report a loss per share of 9 cents, but revenue of $120.3 million increased 19% year over year. Our BMO analyst sees plenty of room for the company to grow in the future. Brian Pitz said that we see a meaningful opportunity for IAS on social media, particularly around monetization of short-form video platforms like TikTok, Instagram Reels, YouTube Shorts, and Facebook Stories. eMarketer forecasts video ads on social media will grow 17% year over year to $42 billion in 2024, generating over half of total social network revenue. The firm gives a price target of $18 on this stock for an upside potential of about 25%. And of course, we have another strong buy consensus. With 13 current ratings, we have 10 buys and 3 holds and an average price target of over $21. That would be an upside potential of nearly 47% from current prices. Down below, we can see our most recent rating here coming from BMO. On the high end, we do have an 88% upside price target from Wells Fargo and a low-end price target of 18% here. So that is a quick look at 3 strong buy stocks in the ad tech industry. Let me know your thoughts on these companies in the comments down below, and if there's others in this sector that have you excited for the year ahead. I always appreciate hearing from you guys. Of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, just meant for some insight and entertainment. Please make sure you always stick to your own investment plan. Thank you guys so much for watching. I hope you have a wonderful day, and I'll see you back here next time.